is David Bloom, Global Head of Foreign Exchange Strategy for HSBC Treasury and Capital Markets. David, thank you so much for joining us. It does seem like it's such a huge week. Is there a danger that we're overstimulating the economy and that, therefore, it forces central banks around the world, such as the UK, but also Europe, to do what they don't want to do?
Well, everyone has to do what they don't want to do. I mean, the question is, it's been a very clear trend to sell the dollar into the FOMC meeting. That's been the easiest trade this year, to be honest with you, and there ain't been many easy things to do. So the question is whether that reverses or it accelerates. And the idea here is if the Fed do more and get involved in more QE, the dollar starts falling quite precipitously and other central banks are forced to act. On the BOJ side and the Japanese authorities, I can believe that, and that's very plausible. It felt like last night something happened because we saw some strange activity in the yen. But for the ECB, no wella, no ways.
David, what does it mean for actually how you put your money in terms of currency? I mean, we saw a little bit of weakness on the dollar and the yen after the Chinese manufacturing, but also an expectation of all this liquidity being pumped into the market.
Well, we'll worry about all the liquidity next week. This week we've got like 5 or 6 major events. You've just highlighted one of the most important, the midterm election, FOMC, Australia tonight as well. The market's still a bit split on them. And an earlier BOJ meeting. We haven't even spoken about the payrolls yet, which is meant to be the most important thing in the world. So it's an action-packed week. But if it works out to be benign, I fear we'll have currency bores rather than currency wars.
But does it mean it is action-packed? Does it mean that we're going to see volatility? I mean, does it make your job that much more difficult? Because actually, it could possibly change the game from day to day.
Yes, I think that's right. It will change from day to day, but volatility is very high. It's like basically getting as high in euro-dollar as we were during the Greek crisis. So that's why I'm saying a benign week would be the shock. So the question is it a continuation pattern? You just continue to sell the dollar, or does it stop it in its path? And, one day you could feel the one and the next day you could feel the other. So, as usual in FX markets, we're going to get the ups and downs.
David, let's say that, in a month's time, when things should have settled in terms of, this packed week and the next week, what kind of level are you seeing for the euro-dollar?
I think the dollar's going to make something of a small comeback, a mini rally towards the end of the year. The midterm elections causes gridlock in Washington. The FOMC will have come and gone like ships in the night. We'll be heading to December. We're all exhausted from this year. It's been frantic again. And I think we come to the end of the year. The dollar has a small rally. We're at like 135 on euro-dollar. Cable somewhere between 155 and 160. So I'm afraid a small rally in the dollar we've got penciled in.
David, in 20 seconds, what about the yen?
The yen is the enigma wrapped in a puzzle that nobody's got much clue on. But I think they will be having to intervene and get involved in the currency because it's getting too strong for them. And whether it's risk on or risk off, the yen seems to be strengthening either way. So the Japanese authorities are going to have to act.
David Bloom, thank you so much for being on the show and good luck for the rest of the week. Well.